In this video, you will learn 1. How to align synthetic indices trends with the trend line for maximum results in the market. There are some points in the trend where you don't need to trade the market, and there are areas where if you trade them correctly, you'll be able to align with this trend line for maximum results in the market. And secondly, you'll be learning a strong, powerful trendline trading strategy, which is specially designed to trade synthetic indices perfectly. This trading strategy is designed for synthetic indices trading, and if you trade them correctly, just the way I will teach you in this video, you will see a strong result in your trading life. And number 3, you'll be learning the best times to trade and when to avoid the market in order to keep most of your profits. Everything is all about timing. If you trade the market at just any time you see the market, you are going to be bound to make a lot of losses. But if you trade them at the right time, you will see yourself making more profits and less losses in the market. Now, let's get to it. Alright guys, so in this video, I'm going to be teaching you one of the best synthetic indices trading strategy. And you can use this trading strategy on almost all the synthetic indices in the market, except for boom and crash and some other peculiar trading assets on Deriv synthetic indices. Well, you can use it on volatility indices, you can use it on step index, you can use it on jump indices and a lot. So if you are the kind of trader that really wants to improve your trading in the market, especially on Deriv synthetic indices, then this video is for you, because I'll be teaching you guys a lot about this trading strategy. I'll also be showing you guys things that will help you to avoid so much downfall when you're trading. Before I start teaching you guys this stuff, I want to first of all give you guys the frame of how this strategy works. So for example, in my previous videos, I've taught you guys how you can trade with the trend. If you have not watched my videos, you can go and watch them. So basically what I was saying there was that if you want to trade with the trend, the best way to trade with the trend is to trade out of the retracement. So for example, let me use this crosshair here. Pay attention to the blue line in the middle of this crosshair. Just pay attention to this small cross here. So if you are trading in a downtrend just like this one here, what you are going to be looking out for is how to sell the market, and the best way to do that is through retracements such as this one here. You trade them through the retracement. I know a lot of traders that like to trade the markets head on, like when they see the market going in a downtrend, they just look for any point to get in, which is very, very wrong. The best way to do this is to trade with the retracement. And I've also seen a lot of traders that when the market is moving in a downtrend, they are looking for that strong point in the market where it's going to reverse from. So they think that that is the best way to trade the market. Like for example, they'll be looking for critical points like this zone here, they'll be looking for this zone here or something like this zone here to trade the market from. But that will give you like a lot of losses, and because the market, when it's moving in a trend, you cannot exactly determine when it's going to stop trending. So because of that, you just want to follow when it is already trending, so that you avoid yourself all this stress of looking out for is it going to sell or is it going to buy. The best way to do it is to wait for the market to trend, give you a retracement, and then you can enter a trade. So thing that you need to understand before you start trading with this trading strategy as a whole. So the best thing you do is to look for trend retracements such as this one here, this trend retracement. This is when the market is making a little pause before continuing in the trend. That is the area where you hit. And In this video, the strategy that I'm going to be teaching you guys is one of the most popular trading strategy in the market, which is the trend line. The trend line is one of the most popular. It is also one of the most powerful trading strategy in the market as far as the financial market is concerned and as far as technical analysis is concerned. Now, for you to trade the market, the first thing you do is to first of all identify the trend. Second, you wait for a retracement, and it is in that retracement that we'll be looking out for the trend line that we are going to be using for our trading. Now, let me show you guys the first trend line. So right here we have the market moving in an uptrend. You can see the market is moving in an uptrend. So like I told you guys before, we are not trading the markets head on, like joining any move in the market just like that. We are only looking out for trading the market when it has given us a retracement, and we are not looking out for trading the market from the opposite region, like selling a buying market. We are not doing that. All we want to do is to wait for the market to come down and give us a retracement, and it is inside that retracement that we are going to be looking out for our own position in the market where we can trade from and make money. So right now, let's zoom this up here. So here we have this price movement here. See the market, it was at this point, it now moved up to this point, it came down and now moved up again. So this is like a little trend. This is a little trend in a big trend. So because of that, we are now looking out for trading it, and so we draw our trend line on the wicks of the lowest candles there. Right, let me show you guys. So here we have the candles. Candle 1, candle 2. So check out this my box here. The first box, that one, the one that is below, is the first price movement. The second one is the second price movement. So it is when they get the third one. The third one is the one that we are going to be trading, which is this one. The third one is the one that the arrow is pointing right now. That is the third time the market touched that trend movement. So what do you need entirely? What you need is a market that is trending up inside a retracement in an uptrend. So when you are in an uptrend, you look for the market going up, just formed a trend pattern. This is what we call a trend pattern. If you don't know it, you can go and watch my previous videos on trend lines and you will see what a trend pattern means. So this is a trend pattern, this one here. So when we have that, the next thing we are looking out for is the next touch on the trend line, which is this one here. If you want this stuff to work for you very well, the best way to do that is to always make sure that you are trading the first touch. That one is the most important among all of them. If the first touch is giving you what you want, that is the one that you should be following. You don't need to be waiting for another touch or the third touch. The way you guys trade it, like traditionally, it will not give you so much results when you trade that, because at a point the market will get weak and it will no longer be able to give you that strong push from that trend line. So what we do is that for drawing the trend line, you should draw them out of the week. You get a point. So you draw them out of the weeks. That's where you draw them, on top of the weeks. So you're not drawing inside the week, just draw him outside the week, because if you draw it inside the week, you're going to get some kind of false signals. So it is always best and advisable for you to draw it on the weeks. Like look at this week here. Look at the week. Draw it on the week. Don't make the line go inside it, just outside, just touching that wick and giving you that pattern. That is the clearest way to draw a trend line. If you don't want stress, you don't want to be confusing your brain and moving the line at any point, all the points in the market, just draw it on the wick. You are fine. Anything you see, that's what you get. Anything you see, that's what you get. When you draw it on the wicks, you don't have time to be saying, okay, maybe it's because I didn't draw it this way, that is why I did not get the right signal. No, when you draw it on the wick, your mind is calm and you no longer worry about every other thing. You just focus, and it gives you this great feeling that you know what you are doing. So now when you have that market touching that trend line like this one here, what you expect is to see an engulfing candle. Look at this engulfing candle here. Look at this engulfing candle. There is the candle that you want to trade with. When you see the market touch this trend line for this retracement movement here, the best way is this. The best thing you should look out for is this engulfing candle. So when you see an engulfing candle like this, it is time to enter the trade, and you can just enter the trade from there. But let me show you guys another example so you will understand this more. All right, so right here we have another price movement that is very powerful, and you can see, guys, so right here this market has started moving in an uptrend, moving strongly in an uptrend. So what we do now is to wait for a retracement. Remember that we can't trade all these little retracements like this one here, this one here. So we wait for a larger retracement. So now that we have that, we look out for a trend movement like this one here. So this one here is a trend movement, and you can see that this is the first point, this is the second point here, and look at the third one. That will now become our entry. So let me draw a box on these price movements. So here we have number one. I'm talking of levels where we draw our trend lines from. So here we have the number two, and this became our number three, which is the one that we use as entry to enter the trade. Now, if you look at the way I drew this my trend line here, you will see that it is different from the one I just showed you guys in the first example. So right here I did the same thing, but it is now looking different. Why? Because the wicks of this one are longer, and this one is like a body and with small wicks. So now all you have to do is that you make sure you draw it at the lowest point of them, just at those wick. Even though the wick is very small, just draw it at the wick. Some of you will ask me a question like, okay, what if the candle has no wick? If it has no wick, just draw it at the lowest point of that body. Just make sure the line is just touching the body. You don't need to draw it inside the body. Just make sure that the line is touching that candle. If it is touching the candle, you are good, and you are good to trade. So just make sure that the line is touching the candle. So right here, and as you can see, we have been trading this on volatility 50. I will also show you guys another trade on volatility 10. So when we have that, you can see that we have an engulfing candle here. We have this engulfing candle here. So when we have that, the next thing we do is to trade. Let me show you guys our example. So for example, when you see that engulfing candle, you trade it immediately. Don't wait for a retracement, because most times you're not going to get a retracement for a lower price movement. So place your stop loss. Place your stop loss just below that the last candle for the engulfing, just below it there, or just the engulfing if the engulfing was the lowest point. So Right here you can see was the last candle before the engulfing, that was the lowest point. So you place your stop loss there, and your take profit target should be at the top here, and it should just be, look at this point here, just draw it on the wicks, like inside the wick of the candle, just at that point. Don't put it at the top here, because the market will just go and touch the area a little bit most times, and it will not hit the take profit. So it is better to put it somewhere here when you know that the market has not gone to the high. So most times it just touch that high and it start going back. So right here you can see that this trade was a successful one, because our stop loss was not hit and the take profit target was hit. Now this happens a lot in the market. It may not happen on all the assets every day, which is normal in the market. Like you won't see a particular setup on all the assets every day. All the OG traders know what I'm talking about, but you will see it at least once in a week on one asset. That's how you are. That's why you need to trade like multiple assets in the market. Analyze multiple assets with one trading strategy, and you are good, guys. You are good to trade. Now, let me show you an example on volatility 10. So right here you can see that the market is moving in a downtrend. Look at the market moving in a downtrend. Look at all these short retracements here. We can trade it. So when we had a long retracement like this one, look at this retracement, big enough to be traded. We now start looking out for our setup. So what we do is that we draw our trend line. So right here you can draw your trend line here. I told you guys it should be on the weeks, so make sure it is on the week. Now right here, so when it is already on the week, that is when you want to trade the market, because you are John Wick. Okay, so when you have that trend line already, you watch out for the price movements here, when it is touching. I already told you guys how this works, how this price movements works. So it is left for you to understand how you get this one. So you already know how you get this one. It is by drawing out the wicks from this point, like John Wick. You draw out these wicks there and make sure that it's at the top there, because right now we are dealing with a downtrend. So you make sure that it's at the top of the wicks, and make sure that when the market returns to this trend line again, it gives you an engulfing candle. You don't want another candle, you want only an engulfing candle. When you have an engulfing candle, you have done like 90% of your homework, and the next thing you have to do is 10%, which is entering the trade with a good risk management. So right here you can trade the market. All you have to do is just enter the trade when you see the engulfing candle, and place your stop loss at the top there. Look at it there, guys. Look at your stop loss there. Place your take profit target somewhere near the candle's body, not at the wick, not at the lowest spot of the wick, just somewhere near the candle's body. Now when you have that, you can now you just wait for the market to hit your take profit target, because it must hit your take profit target. It has no other option than to hit your take profit target. So now this is the way that you trade this trend line. And if you do it like this, just the way that I've taught you guys, you can go to your charts, you will see them a lot, and you try to replicate everything that I've done here. It is not quantum physics. This is not further mathematics like they taught you guys in school. This is not chemistry. This is not physics class. This is pure biology. I know a lot of you like biology when you were in school. All right. So when you have that, it is so simple like this that you just trade them and you can start from there and start making your money. Then you make enough money to buy yourself a Bugatti. Is That's how it is, guys. So when you have that already, it's your time to shine in the market. You don't wait for any other thing. Once you see the engulfing candle, you see, I told you guys that it's best to enter after the engulfing candle. When you enter after the engulfing candle, you you win because you don't wait for it to retrace. It's almost never retraces. Just enter immediately you see the engulfing candle there. So guys, if you are actually new to Deriv synthetic indices, you can join our broker using the link in the description box below. And if you want to join our VIP signal group, in our VIP signal group, I give trading signals every single day in the market. We have been trading a lot of trades lately and we have been making a lot of money from the markets. I'll be posting some of my results in my post on this YouTube channel so you guys can see what we do there. We are making a lot of results and we are taking a lot of trades, like high professional trades with high risk return. So we can risk one and gain 10. Sometimes we can risk one and gain 6. So it's very, very effective, guys. If you want to join us, you can click the link in the description box below and you go through the process and you'll be one of us. All right, guys. So I will see you all in the next one.